Did you know what the true price of Tesla stock should be? Which of the several Tesla stock valuations provided by different experts and investors is the most likely? To find out, keep watching and listening. While some believe that Tesla's stock is overpriced, others have bold price projections for the company for the ensuing years. The stock market is normally very unpredictable, but given the state of the global economy right now, this is especially true. Undoubtedly, the COVID-19 outbreak caused significant disruptions to numerous enterprises, with many only now beginning to reopen. You will now learn how much you should actually pay for Tesla shares in today's video. Tesla has revealed that it delivered 310,000 vehicles in the first quarter of 2022. Even though it fell somewhat short of Wall Street projections, it represents a 70% increase over the same period previous year. The rapid growth is in line with the skyrocketing price of Tesla's stock. The question of how to value Tesla stock now emerges. Leaping ahead to 2032, there exists a tripartite procedure. The first step is to estimate Tesla's revenue and earnings. The second step provides us with a projected future valuation for the company by applying a stock market multiple to the predicted profit. The final stage involves converting the future value into the present and contrasting it with the market value as of right now. Making future projections for Tesla is the first step. Worldwide, almost 90 million cars are sold, and the number of electric vehicles is rising quickly. Approximately 25% of all automobile sales by 2030 will be electric vehicles, predicts the statisticians at IAS and Market. The majority of large automakers are aiming for more than that, so using 33% in 2032 projections is not out of the question. Based on a conservative projection of global GDP growth, if automobile sales increase by 3% annually, the world's automakers will ship 133 million cars in 10 years, or 44.4 million electric vehicle sales at a penetration rate of 33%. Market share estimates for Tesla are not all the same. For example, compared to other countries, it is significantly greater in the United States. According to Statistica, in Q3 2021, Tesla was responsible for about 20% of all EV sales worldwide. It will sell about 9 million automobiles in the future, assuming Tesla owns a 20% stake. A Tesla vehicle currently costs, on average, about $60,000. It's hard to predict if this will increase in line with inflation or decrease when Tesla releases more affordable versions. Thus, if nothing changes, Tesla could sell 9 million cars for $60,000 and bring in $532 billion. As far as profits go, the business currently turns a profit margin of 17% before interest, taxes, depreciation, and amortization. Again, if nothing changes, the corporation may make $91 billion in EBITDA profit in 2032, 17% of $532 billion. It is worthwhile to consider what Tesla will be valued in 10 years, since the next step is to apply a stock market multiple to the projected profit in order to provide us with a speculative future value for the company. Selecting a market multiple to apply to our projected EBITDA in order to get Tesla's 2032 valuation is the next step. Most of this is conjecture. Tesla's current multiple is excessively high and represents the quick growth that investors are expecting. Thus, it is of little use. Some automakers trade at a multiple that is more in line with 10x EBITDA. Since the company is involved in more ventures than just autos, and some of these ventures may prove to be extremely profitable as well, Tesla's multiple is probably larger than this. Applying this to the $91 billion in estimated EBITDA profit and taking a 15x multiple would result in a future firm valuation of $1.36 trillion, or around 40% greater than the current level based on the number of outstanding shares. Keep in mind that this number is for 10 years from now, therefore some further estimation is needed to translate it to a value for today. The final stage involves translating the future worth into the present and contrasting it with the market value as of right now. What is the current value of Tesla? You must divide a future number by a discount rate in order to convert it to its current value. Several times, using a 10-year time horizon as an example, 10x in. More thought must go into the discount rate selection, but 7% is a reasonable starting point. With a 7% discount rate, Tesla's present value comes to $690.1 billion, or $655 a share. However, that is 30% less than the $986 billion of today. Suppose that in 10 years, the percentage of EVs in all cars would be 50% rather than 33%. That makes sense considering that these are the output numbers that the majority of the big automakers are aiming for. Assuming no changes in other variables, the current computed fair value would be significantly greater. Indeed, it. However, if Tesla increases its market share from 20% to 30% in 10 years, the estimated value would be nearly identical to the current $986 billion. Assuming that in 2032, half of all automobiles are electric vehicles, and Tesla holds a 30% market share, the company's stock price would rise by 40% from its current level. All of this shows that stock valuation is an art rather than a precise science. Although the future is unpredictable, these exercises can be highly helpful in determining the market's perception of the company's prospects. Bears will contend that the positive scenarios put up by Tesla are not just conceivable, but also likely, while bulls would contend that the exact opposite is true. However, stock markets are all about that. Do you believe the price of Tesla stock is too high or too low? Please share your thoughts with us by posting a comment below. The second query is it wise to purchase Tesla stock? Even while the future is unpredictable, one thing is for sure. Electric automobiles will be more common than they are now. There will probably be significant changes in consumer demand and vehicle preferences as a result of the current spike in oil and petrol prices. Many individuals are filling up their vehicles and trucks with fuel that is nearly twice as expensive as it was a year ago. Given that demand exceeds supply, a decrease in oil prices is unlikely to occur very soon. It is a primary cause of the extreme inflationary pressures that have engulfed the world, forcing central banks to hike interest rates and igniting concerns about a worldwide recession. According to Kevin O'Leary, the best moment to invest is when everyone else is selling their stocks, even in cases where EV firm stock has been declining. He likened this tactic or maneuver to the lemming effect. In psychology, the term lemming effect describes a phenomena where groups of people in different walks of life behave a specific way simply because most of their peers do. O'Leary is a businessman, entrepreneur, politician, writer, and television host from Canada. He serves as the head of. On ABC's Shark Tank, Mr. Wonderful is a strategic investor for O'Shares Investment Advisors and Beanstalks. We're beginning to believe that not only will Tesla take the biggest share of the electric vehicle market, we also believe that it could take 20 to 25% share of the total auto market in 5 years. That's by 2026, states Cathie Wood. The founder, CEO, and CIO of ARK Invest, an investment firm with $60 billion in assets that makes bets on cutting-edge technologies like genomics and self-driving cars, is Wood, an American investor and renowned stock picker. Wood outlined the opportunity for investors to acquire millionaires by holding Tesla shares until 2025 in a recent video. Dan Ives, a well-known Tesla bull, is a Wedbush analyst. Daniel Ives has been covering the software and broader technology industries on Wall Street for 20 years. He joined Wedbush Securities in 2018 as a managing director and senior equities research analyst. Notwithstanding Tesla's poor trading performance brought on by China's zero COVID deregulations, which caused supply and demand catastrophes, and Musk's contentious Twitter purchase discussions, he still rates the business as one of his top tech picks. Ives thinks that when China's production and demand problems are rectified, Tesla should start to make some headway. If you're searching for a reliable stock whose future growth is generally anticipated, Tesla stock is definitely a smart investment. Tesla Group, the world's top producer of electric vehicles, is capitalizing on the worldwide green shift. Despite not paying a dividend, this stock is not a yield stock, but it can diversify your portfolio and result in an intriguing long-term capital gain. As previously stated, stock values are subject to constant fluctuations. Nevertheless, there are a number of reasons why Tesla's stock could rise. 1. When it comes to energy efficiency, the EV company leads. 2. The business welcomes novel approaches. 3. Its brand image is powerful. Tesla is dedicated to the ecological shift and has exciting future technologies. And lastly, battery development at the company. However, there are several explanations for why Tesla stock could decline. 1. Its meager global footprint. 2. The company's luxury goods, which only appeal to a tiny portion of the market and may result in some sales issues. 3. Vigorous rivalry. 4. High expenses for operations. 5. Low visibility in the long run. Naturally, no one can accurately forecast the future. Therefore, these are only educated assumptions based on the information that is now available. Furthermore, because of how quickly the stock market may fluctuate, investing is inherently risky. Nonetheless, a lot of seasoned investors think Tesla is risk-worthy given its enormous potential for future growth. If you liked this video, out are other videos on ours.